Central Bank of Nigeria authorizes use of old Naira notes. Silicon Valley Bank, Biden says U.S. banking system is safe. Oil prices edge lower as Silicon Valley Bank collapse books financial markets. On the program today, issues around the Silicon Valley will take the front burner. This is Business Express for the network service of the NTA. I am Musa Abubakar. Now, in total compliance with the Supreme Court's ruling, the Central Bank of Nigeria has declared that the old 200, 500 and 1,000 Naira notes remain legal tender till December 31st. The Acting Director, Corporate Communications Department, Dr. Isa Abdul Mumin, said the move is in compliance with the established tradition of obedience to court orders and sustenance of the rule of law principle that characterized the government of President Muhammadu Buhari, and by extension the operations of the Central Bank of Nigeria. Accordingly, the CBN met with the Bankers Committee and has directed that the old 200, 500 and 1,000 Naira banknotes remain legal tender alongside the redesigned banknotes till December 31st, 2023. Consequently, all concerned are directed to conform accordingly. Now, for decades, 4 decades ago, Silicon Valley Bank was born in the heart of a region known for its technological prowess and savvy decision-making. The California headquartered organization grew to become the 16th largest bank in the U.S., catering for the financial needs of technology companies around the world before a series of ill-fated investment decisions which led to its collapse. To speak more on issues around what happened to Silicon Valley Bank and what the United States government is doing is a senior economist with SPM Professionals, Paul Alaje. He joins us via Zoom from Dubai. Welcome to Business Express.
Yeah, good morning, and thank you so very much for having me.
Okay, before we continue the conversation in the program, let's take this excerpt where the President of the United States, Joe Biden, speaks about protecting depositors but not investors in Silicon Valley Bank and Signature Bank.
Hey, thanks to the quick action of my administration over the past few days, Americans can have confidence that the banking system is safe. Your deposits will be there when you need them. Small businesses across the country, the deposit accounts at these banks can breathe easier knowing they'll be able to pay their workers and pay their bills. And their hardworking employees can breathe easier as well. Last week, when we learned of the problems of the banks and the impact they could have on jobs of small businesses and banking system overall, I instructed my team to act quickly to protect these interests. They've done that. On Friday, the government regulator in charge, the FDIC, took control of Silicon Valley Bank's assets. And over the weekend, it took control of Signature Bank's assets. Treasury Secretary Yellen and a team of banking regulators have taken action, immediate action. And here are the highlights. First, all customers who had deposits in these banks can rest assured they'll be protected and they'll have access to their money as of today. That includes small businesses across the country that bank there and need to make payroll, pay their bills, and stay open for business. No losses will be, and this is an important point, no losses will be borne by the taxpayers. Let me repeat that. No losses will be borne by the taxpayers. Instead, the money will come from the fees that banks pay into the Deposit Insurance Fund. Because of the actions that our regulators have already taken, every American should feel confident that their deposits will be there if and when they need them. Second, the management of these banks will be fired. If the bank is taken over by FDIC, the people running the bank should not work there anymore. Third, investors in the banks will not be protected. They knowingly took a risk, and when the risk didn't pay off, investors lose their money. That's how capitalism works. And fourth, there are important questions of how these banks got into the circumstance in the first place. We must get the full accounting of what happened and why those responsible can be held accountable. In my administration, no one is above the law. And finally, we must reduce the risk of this happening again.
Now, Mr. Alaje, before we talk about this particular speech and the Silicon Valley issue, I would like to pick your brain on this issue of Naira redesign policy. That last night, CBN decided that people can now accept the 500 and 1,000 Naira to coexist with the new Naira note. What do you make of this development?
Thank you so very much for having me once again. Recall that the Apex Bank in Nigeria had ruled that from now till 31st of December, hold notes, namely 200, 500, and 1,000 Naira notes, must remain legal tender with the new counterpart of 200, 500, and 1,000 Naira notes. Also recall that barely a week or 2 weeks before that time, President Buhari in a national broadcast had said the 200 Naira note will only remain a legal tender till April 2023. But with the circulation of the central bank, it means that may not hold anymore. It also means that those that have the 500 Naira and 1,000 Naira note can now feel free to approach grocery store, to approach buses and every other commodity or interest they may want to purchase, any other thing they want to purchase or things of interest, for instance, paying school fees and so on and so forth. They are now free to spend the money, whether it is old note or new note, and both will coexist side by side till the day that have been set by the courts. Now, it's in a way going to bring some level of relief, to the system. But here is the issue. What the courts did not say, and central bank did not also say in the circular, is will money supply increase?
Yes.
Because what has been withdrawn from the system is the central bank going to use the new note to pull it back to the system, or are we still going to operate the system in which there was so much withdrawal of cash in transactions, CIC? So if CIC will still be withdrawn, then let me tell you the truth. In the next 1 week or 2 weeks, you will still call me to say, in spite of the judgment, we still don't have enough cash in the system. And I guess the latter will be the case, because the central bank will use all monetary policy to fight inflation. Inflation in Nigeria is over 20%, as against the target of Central Bank of Nigeria to be between 6% to 9%. As I speak to you, it's over 21%, and it's even projected to go higher. So I think that the court did not actually mention, because when it comes to that, the power on deciding what NPR will be lies with the central bank. What money supply will be lies solely with the central bank. And I can tell you that with the body language and previous policy have been made by central bank, I doubt if money supply would increase significantly. Look at the 200 Naira. It was said to be in the system. The moment, a week after President made the announcement, you notice it became scarce. Now, what could be outlined in this whole conversation could be that immediately after the gubernatorial election, we might see relief. However, if we don't see relief, then you need to watch the policy one more time. People have said after the presidential election, there will be money, there will be circulation of new notes or the old notes. I laughed, and I can tell you the election has since been over almost 2 weeks on Saturday. But have we asked if people have access to the notes? So for both new and the old, it will depend solely on money supply if it will be available at all.
Well, as we watch, let's hope things get better for now. But to Silicon Valley issue, who would have thought that a bank like this, I think it's the 16th largest bank in the United States, who would have thought that it will just, the situation will get so bad like this?
Well, investor confidence is going to go low, especially in tech sector. And I can tell you, like the President of America, Joe Biden, have said, investors are not going to be protected. But the country, and I mean countries over the world, has the mandate to protect depositors. Depositors are not bank owners. Shareholders of the bank are the investors, those who save money or have current account or whatever account it may be, whether corporate or personal, are those that have deposited money in the bank. They must be protected. Nigeria is an insurance organization that protects in the case of Nigeria. So here is it. Why did the bank fail? And what lessons must the financial sector and financial system in Nigeria learn? And what errors are possible that Nigerian financial institutions are making today? Government bond. Government bond is what the bank invested in as against what should be the core focus and core mandate of the bank. Now, the interest rate in government bond continues to go high, and it is inversely related to the bond that the bank bought. It bought it so significantly that it brought the bank on its nail. And I can tell you that you are looking for safe haven, and that is what killed the bank. You know, the bank is not willing to take risk beyond certain level. In COVID period, COVID era 2020 to extend to 2021, this is one of the banks that has significant growth. Unfortunately, the bank went beyond its core mandate and wanted to also play safe. Unfortunately, there is no safety in safe haven.
What do you think triggered run on the bank? What do you think, besides the bonds issue that you mentioned, which other things that the bank didn't actually handle well? Because I learned that there's an issue of inadequate liquidity and insolvency.
Okay, so the bank did not also follow the central bank. I mean, not central bank now. The Apex Bank of America. The bank did not Fed, so it did not also follow the Federal Reserve regulation of what the minimum requirement of what liquidity ratio, cash reserve requirement should be. It didn't follow it. Unfortunately, there was no proper monitoring, because if you have not followed within a month or 2 months, the gap will not be so much. Because the bank did not follow it, and depositor came, and the bank has no cash. Again, we go back to the issue of cash. Recall that people were stealing banks in Nigeria because they went to the bank and they felt that their money had disappeared, not knowing that they could spend their money digitally. But on the case of the Silicon Valley Bank, both cash and digital money, none was redeemable by this bank. And as depositors went in their numbers because of fear, this did not only bring risk to the bank, it also brought risk to the industry. And this particularly is another reason why the bank has to throw in the towel, that they've gotten to a point where they cannot continue. And the good news again is that some other banks have come to rescue, some other banks are taking over the asset, in other regions, they're taking over the assets of the bank in other regions, so that it's not a total loss. At least there could be some level of recovery, and more importantly, investors' fund will remain protected. I beg your pardon, the depositors' fund will remain protected.
Okay, what do you make of the president's speech to reassure depositors of that bank? What do you make of the move by the United States?
I think it's responsible. President Joe Biden has done the right thing. He has done what is responsible in the circumstances. What many in tech may wonder is, why is it that the government of the United States has refused to bail out, unlike the top 5 banks that usually receive a bailout from the system? I can tell you, and this is the reality across the globe, what many are focusing on, especially in tech, is no longer profitability or revenue, people are now looking at sellability. Unfortunately, sellability has no complete place in economics. So you see people say, this is my value. If you value me, buy me at this rate. Most of those tech companies don't have assets to back up what their value is. They don't have profits to show that they have performed over the years. You see company that is just 1 year or 2 years old, and the company is saying now worth 15, 20, $10 billion. And you wonder, when you compare the revenue and you compare the assets, the real assets of the company to what has been said, then you wonder if some of those companies can actually have a place in the reality of the economy.
Now, do you believe, do you agree with the president's speech that the banking system is somehow safe? And when investors in the future get greedy, most especially in the banking sector?
Well, I believe that the banking sector is safe. I've read a number of reports on the American banking system. It shows that most of the banking system, they are safe, even though we have this challenge with a few banks. The truth is that America is going to witness what we call the industry risk in the banking system in the short term. But in the long term, I can tell you, because American government usually support the major banks, the big banks, and I'm sure the American government will not want this issue to take the country into a recession. So that said, the banking system in America is safe based on the available reports and the practice over time. But for investors in the bank, the president has said, yes, it's a capitalist system, is a capitalist economy, is a capitalist driven country. So investors may eventually lose some of their funds if it is not properly monitored. So investors all over the world have a window of protecting what belongs to them. That is why you have annual general meetings, and this is also applicable in Nigeria. When investors don't show up and ask questions or get reports to see what the books look like on quarterly or annual basis, investor may end up losing all they have invested. It's a risk. It may return to profit, or it may also return to loss. In this case, unfortunately, it appears it has turned to a loss.
Okay, what we are seeing now, how will this impact on Wall Street and the banking sector?
So, like what I've said, there's going to be a short-term impact on the banking sector because people need to be very sure. You saw similar things happen to crypto, where one or two crypto companies went down because of their inability to meet up with demand. That's really had major negative impact on crypto prices. You could see that the market reported for 2 weeks consecutively the crypto prices were going down. But over a period of time, those that have stability, they emerge from the pressure of the industry risk that one of the crypto companies or two of them put the entire industry into. I see the same thing for America, especially those banks that might be doing a lot with tech, or those that made the same mistake that this bank has made. So in the short term, I see that happen, but I believe it will not extend beyond the medium term, and it will never get to in the long term, because America has a robust economic system and a robust economic structure that the government will do everything to intervene, which we have seen a number of times. And that is why John Maynard Keynes, the father of macroeconomics, have said it's not going to be the classical system that we hold in most places. Meanwhile, this is what has been preached or what has been accepted in the UK over time. But John Maynard Keynes brought a different narrative, that there is always the need for government intervention, because classical believe that in the long run that will go back to equilibrium, economy will return to equilibrium. But in the real sense, when is the long run? In the long run, we are all dead, because we are not sure whether the long run will take 50 years or 100 years or 120 years. It's until we are able to vary all factors of production. But all factors of production is not what can be varied within a short period of time. That is why we make it long run. So because of the uncertainty of the long run, we might be ordered. That is why government, including Nigeria, including America, intervene in some decisions when the government notices that it may have sporadic effect on macro economy, such that they have implication on unemployment, we have implication on inflation, and so on and so forth. So I see a situation where it's just a bank that's folded up in a way. That's how we call it in Nigeria. But the president of a country, how many banks are folded up in Nigeria? You have never seen any president make any mention of sort. But you see central bank quickly commit, is a symbol of government to say, don't worry, it is true that this bank has issues. Another bank is coming to take over from the bank to ensure that it doesn't cause major industry risk. And again, the bank will say depositors' fund is protected. You've also seen where the Apex, the government will have made arrangement for a takeover of the bank, and when that happens, the management of the bank is supposed to be fired, which is what the president said. Because if they had made the right decision, the bank would never have gotten to this situation that it has found itself.
Okay, thank you very much, Mr. Paul Alaje, senior
Thank you so very much
with SPM Professional.
Thank you so much for having me.
Now, moving on, let's take a trip to the commodities market. Now, the Nigerian exchange closed negative amidst buy interest and sell-offs as bears dominated proceedings, driving down the broad market. The all-share index depreciated by 0.01% to close at 55,788.37 basis points. In the same vein, market capitalization declined by 3 billion naira to close at 30.39 trillion naira, while the year-to-date returns settle at 8.12%. The stock market has advanced by 4,192.21 basis points since the start of the year. Market breadth closed negative as UPL led 11 gainers and 21 losers, topped by NGX Group at the end of Monday's trading session. Asian markets tumbled, led by Japan, South Korea, and Hong Kong, as investors weigh Silicon Valley Bank concerns. Global stock market update is next with Bossede Abel.
Asia market tumbled on Tuesday in a volatile session after sharp losses seen overnight as investors grappled with the fallout of failed banks in the US, including Silicon Valley Bank. In Japan, the Nikkei 225 was lower 2.19% at 27,222.04. Hong Kong's Hang Seng Index fell 2.2%, and the Shanghai Composite also 0.72% lower. U.S. futures rose on Tuesday morning after the Dow Jones Industrial Average notched a fifth day of losses. Traders also looked ahead to a key inflation report due later Tuesday. Dow Jones Industrial Average futures rose by 94 points, or 0.14%. S&P 500 and Nasdaq 100 futures also climbed 0.17% and 0.15%. European markets are heading for a higher open Tuesday, even as the aftershocks from Silicon Valley Bank's collapse continue to ripple through financial markets. Britain's FTSE is lower by 2.85%. In Africa, South Africa's JSE Africa Top 40 dipped at 69,042.88, lower by 0.99%. Namibia's overall index 0.10%, while others on the continent have just opened for trading and yet to post numbers. Bossede Able, Business Express.
Well, that's it. Business Express returns tomorrow at 3 p.m. Thanks for watching.